In the history of economic bubbles, we see incredible gains right before the end. There is also usually a time in which the market can't make up its mind. It swings up and down for sometimes even months, but eventually that which was swept under the rug makes its way out. You came here for the truth, so let me unveil that for you. Today we're going to cover what happened last time, and let's look at that right away. The last time we have seen this euphoria was during the Great Depression. 1929, there was a gain of 495%. Bull markets in the Dow Jones, we're looking at 1900 to date. And you will see that the only times this has happened was 1929, as I said, but also 1937, both during this Great Depression time frame. So we had a dead cat bounce during this time period here, where the market had come down significantly. People bought up shares at this moment, watching it rise considerably. However, the market then tanked even further, and from the top to the bottom, it was an 89% drop. Okay, 89% drop. So many people thought they were getting a deal in this area here, but unfortunately that wasn't the case. Only a temporary rise before it fell to the bottom yet again. And nobody was winning. I mean, very, very, very few people were winning on this drop downward, okay? A lot of big businesses went under. The government was in absolute dire straits at the time, and you saw obviously what came after that. Now this is a very serious situation. This shows us what happens, how they can use this opportunity to form new trade pacts, and then it goes on further than that into different currency pacts and everything. Look at what happened with Bretton Woods, look at the creation of the IMF, the UN, and so on. We have major catastrophes that exist, and they go on not just during the economic event, but afterwards as well. So during this time frame, we are seeing a 300+% gain, and it just continues here. That's from January, so of course that has been exceeded now, but look at the duration here. You can see this 107 months in a row, actually surpassing everything on this list. That really tells us something, that what has happened, and it's gone far beyond. I mean, just look at this. The average, 140%, the median, 85%, and this today, 300%. So this is a significant bull market no matter how you look at it. And that's because any time the market has tried to dip downward, they have formed a support. And so it can continue its trajectory upward. And again, it decides to come downward a little bit, and the market is there to support it. The Federal Reserve is there to support it. And the same thing happens on and on and on, and it goes off into Never Never Land. So we don't know exactly how far it's going to go, but I can assure you it's going to be very messy when it all comes down. This is the second longest and second largest bull market. So you'll see this for yourself. And there's no way to look at this other than the fact that this is one of the biggest bull markets ever in history. And many people who bought in on March 9th, 2009 and have been riding the wave ever since have made serious gains in their portfolio. Of course, if they've held on throughout this time period, they haven't made any money. But of course, their assets have definitely appreciated. So unless they've been taking dividends or anything else, definitely haven't been making money. But you can see here that with this asset appreciation, they have an opportunity to perhaps, take a little piece off the top and let the rest of it ride. Why not, right? This is a good opportunity to do so and invest in other asset classes. Definitely would be a good, wise choice, but most people don't because they have this pie here, and they are well diversified. Yes, they have Facebook, they have Amazon, they have Apple, and they have Netflix. That's right. So, this is the type of things that people are not really, maybe a little Google in there too, sure, why not, that people ultimately are not thinking about, because they see a bull market, they see it rising, and hey, why the hell should I sell? Why should I take a profit if it's going to rise forever? Doesn't make any sense. Well, it's good to take a profit at any given moment when you feel that it's time, and you don't have to necessarily sell everything, but you simply sell some and you invest in another asset class that you haven't got exposure to before. You know, some asset classes, it works like a sine wave here, and you'll see that there are opportunities to get in and there are opportunities to sell. So when it hits the bottom, this is when you need to realize that, hey, this asset is undervalued, I need to get in. And then when it becomes overvalued, you need to sell. And that's the way it works. You can't just have one asset class all the time. You take the profits from the top. You can leave your money in there, but you take the profits from the top and you reinvest at something that is currently at the bottom. US budget deficit, guess what? It increased. Now, does that surprise anybody? Not at all. All right, moving on. Interest on the public debt, look at this, $28 billion. Now I have some conflicting numbers here. I don't know exactly what this includes, but you're looking at this interest on the public debt. If it's just February, I don't know how they're calculating it, but I wanted to show you this. I'm sure you've seen it before. The US debt clock. An amazing website. So all you got to do is, if you haven't seen it before, but I'm sure you have, usdebtclock.org. Incredible site, because it shows you actually all of the sources. So for example, if I want to see the US population, I put my mouse over that, and up on the top here, it will tell me what it means exactly, and then it says source, US Census. And you could do this for any of these in here. And I just wanted to go around and just address some things. You know, you have the US national debt growing now to about $21 trillion. But of course, that's not an issue. Don't worry, debt per citizen, $63,000. No worries, debt per taxpayer, $172,000. I found this to be interesting. The derivatives, now they calculate these derivatives based on the Bank for International Settlements and the biz, that would be at 570 trillion. Just in case you weren't aware, that's commas in between here, and that's $570 trillion. I've heard numbers all the way up to 2.2 quadrillion. To me, it doesn't even matter, because this is a value that can never be paid back. And there are so many in here, I don't even know where to begin, but look at this. Total interest paid by the US, $2.6 trillion. Now that to me is incredibly significant. Who is the interest paid to? There's an unlimited amount of money that could be printed by any country. You don't need a foreign central bank to do it. You don't need to have borrowing happening technically from other countries. If you want, you can have the Treasury do all of that for you. But yet, we don't do that. All governments utilize a central bank, and the central bank has no transparency. They give you their FOMC meeting notes, meeting minutes, 5 years later. What's the point? And actually, in the one case we saw recently, that Powell actually admitted they have a short volatility position. But anyway, in general, what good is it to us if we don't know what they're doing until 5 years later? That's the kind of thing that isn't being talked about. The fact that we are paying interest to either a foreign government, or we are paying it to a central bank, which is basically a foreign entity. Why? I'm not in favor of printing money at all, but I'd rather have the Treasury print the money than a central bank, or borrow it from the outside at ridiculous rates and other business that they deal with. Hey, at the very least, have the Treasury do it. This is ultimately a failed policy, but it's better. It's not much better. U.S. debt held by foreign countries, $6 trillion. That's enough to crush the U.S. I know that you would compare that to, for example, total national assets, and you would say, no, not a big deal. But if you were to collapse a few $1 trillion worth of anything, you could set this all ablaze, I assure you. All of it. U.S. unfunded liabilities using GAAP. Now, GAAP is very important. These are the generally accepted accounting principles. Every corporation, if you have a corporation, you need to follow GAAP. Okay, no matter where you live, most likely you have to follow GAAP. And this GAAP is not followed by the US government, so they can show that their liabilities are significantly lower than what they've told us. However, include them, and all of a sudden you get to $112 trillion. That is, look at this. I mean, when you think about it, the total GDP of the US is looking at about 20 trillion. Now, where is it? There's so many, I can't even find. There it is. About 20 trillion, okay? Total unfunded liabilities, $112 trillion. There's no way that this ever will be paid back. Medicare, 27, Social Security, 16. Now, how in the world will they ever be able to manage all of the debt that has accumulated? It's impossible. Look, give me this fake GDP ratio, 105%, still impossible to ever pay. Truly. And they're talking about the stock market rising and rising and rising and rising. That's fine. The central bank can intervene and push that stock market higher. But all it takes is a spark. All it takes is a trigger. There is a linchpin that will be pulled, and it will bring this system down. And when it does, the bigger all of these numbers are, whichever one you're looking at, doesn't matter. Okay? Any of these, the bigger they are, the harder they fall. And that is a fact. Okay? Take a look at the stock market today. This is not even the most recent numbers, it looks like, because it's gone significantly higher than that. But always what I tend to see is a rise that goes parabolic, practically straight, and there could be one of two things. There could be something just breaking it and it falls down immediately, or an event that occurs that sort of gives instability to the market, and you see this constant, maybe it's down, maybe it's up, and then eventually something knocks it down completely. All it takes is one of these moments where it falls a little too much. It triggers something, then we have derivatives exploding and everything else. So that's all. I just want to make sure that everybody knows what's going on. What you do with your money, that's all on you. I'm not here to give anybody advice. I'm not here to give anybody anything except for the truth. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. At Amazon, they actually have this look inside feature. If you go there, links are in the description, you can flip through these books to see if you like them. Now, you definitely want to join me on this channel. Every day I'm posting videos. You can just hit that subscribe button. You will get notified of all my videos. Check me out every day. I'm on here. All good information. Hope to see you soon. Take care.